The year 2025 is remarkable for gold. Investors and governments are turning back to gold. Gold's role as a store of value is rediscovered. Central banks are purchasing gold at record levels. In Q1 2025 they added 244 tons. This surpasses the 5-year average by 24%. These actions show a belief in gold's enduring value. The world in 2025 faces economic uncertainties. Gold is a safe harbor during turbulent times. Its resurgence reflects unease about financial stability. For investors, it offers new diversification opportunities. The story of gold in 2025 is compelling. Central banks around the globe are leading the charge in acquiring gold. A primary driver for these unprecedented purchases is the desire to diversify their reserve assets. By adding significant quantities of gold to their holdings, central banks aim to spread their risk. Gold has an inverse relationship with the dollar. When the dollar weakens, gold often strengthens. This diversification helps protect a nation's wealth from the fluctuations of a single currency. Another critical reason for this gold buying spree is to reduce dependence on the US dollar. This is part of a broader trend often referred to as de-dollarization. Many countries are seeking greater monetary independence. Gold offers an alternative that allows them to conduct international trade and store wealth outside the direct control of the dollar-based system. The threat of sanctions and the desire to hedge against global financial crises also play a significant role in central bank gold strategies. Central banks from various regions, including Asia and Europe, are actively bolstering their gold reserves. Gold has a long and storied history as a reliable hedge against inflation. When the prices of goods and services rise, the purchasing power of fiat currencies tends to fall. In such an environment, gold often maintains or even increases its value. During periods of high inflation, investors and even ordinary citizens turn to gold to preserve their wealth. Similarly, gold serves as a crucial protector against currency devaluation. When a currency loses value, holding assets denominated in that currency results in a loss of real wealth. Gold, however, is priced globally and tends to rise in value when a specific currency weakens. Economic uncertainty consistently drives investors towards the perceived safety of gold. During major financial crises, gold prices typically appreciated. The current surge in gold's popularity in 2025 is a direct response to ongoing economic uncertainties. Overall, gold demand surged by an astounding 170% year-on-year in the first quarter of 2025. History teaches us that in times of doubt, gold shines brightest as a beacon of stability. The current geopolitical climate is a significant factor fueling the rise in gold's attractiveness. International tensions have sent ripples of uncertainty throughout the global financial system. These events highlight the risks associated with over-reliance on any single currency or financial network. Countries are increasingly aware that their foreign reserves and access to international payment systems can be weaponized. In this environment, gold becomes an invaluable tool for mitigating geopolitical risks. This desire for greater financial autonomy is closely linked to the growing de-dollarization movement. Many nations are actively seeking ways to reduce their dependence on the US dollar. Gold plays a pivotal role in these efforts. Countries are exploring innovative financial instruments including gold-backed digital assets. The weakening of the US dollar on international markets has also provided a strong tailwind for gold prices. As the dollar's value has depreciated, gold has become relatively more expensive. Countries holding large dollar reserves are increasingly motivated to shift a portion of their holdings into gold. For investors, the resurgence of gold in 2025 presents compelling reasons to consider it as part of a diversified portfolio. The rising value of gold makes it an attractive option for hedging against economic instability. Gold often behaves differently from stocks and bonds, helping to smooth out overall portfolio volatility. The significant inflows into gold-backed exchange-traded funds, or ETFs, globally underscore this trend. In the first quarter of 2025, gold-backed ETF holdings increased by a substantial 226 tons. The interest in gold ETFs is geographically widespread. Europe led these inflows in Q1 2025, adding 55 tons. In Asia, ETF holdings saw a 34-ton increase. For everyday people, the implications of gold's rising prominence are varied. Those who already own gold will benefit from the increase in its value. The advent of digital gold, particularly gold-backed stablecoins, is also changing how individuals can interact with gold. As we look to the future, gold's role appears to be solidifying, suggesting that this ancient metal has a very bright future in our modern, complex world.